So, hello everyone. A very warm welcome to all of you people in our today's discussion, in our today's live session, in which we are going to discuss about the small finance bank and the universal bank licensing. What is the regime in India, and what is this small finance bank is all about, and why it was in news. First of all, before that, uh, so in a discussion, meanwhile, we will also discuss that why it was in news if we are having a live session on a small finance bank or even for universal banking, then what is the reason behind it? What was that news that was there in the current affairs because of which we are covering this particular topic? So now just allow me a minute, and then we will let me share my screen, and then we will begin with our discussion of the day. So small finance bank and small finance bank and the universal bank, it was there in the news, and this is the reason why we are covering it. So first of all, the basic fundamental thing is why we are covering this particular topic. There are multiple topics that are there in current affairs, but why we are covering only these two topics? The first and the foremost thing is that in the year 2014, RBI has already framed 2 to 3 questions in phase 1 as well as in phase 2 on the topic of small finance bank. And what was the reason? Because in the year 2024, it was the 10th year of completion since the establishment or since the recommendation of small finance bank. So in 2024, the regime or the incorporation or the idea of small finance bank completed it 10 years, and that is the reason this topic becomes important. And in the previous year as well, RBI has framed a question, and now in this year as well, one incident happened. One incident happened that made this particular topic extremely important. And what was that incident? So RBI has granted in principle approval. RBI has granted in principle approval to a small finance bank. What was the name of the small finance bank? AU. AU Small Finance Bank got the license from RBI to convert from a small finance bank to a universal bank. Now there are multiple these kind of scenarios keep happening. Okay? RBI may be granting licenses to any RRB, or remove the licensing of any RRB or any NBFC. But this particular principal approval of RBI to AU Small Finance Bank to convert into a universal bank is important. Why so? The first reason, we know that it's been the 10 year in the last financial year only, that it's been 10 years uh, for the small finance bank. But the major important thing is that the last approval was there in the year 2014, and since then, almost 11 to 12 years since then, there was no approval from RBI to any small finance bank to transit from a small finance bank to a universal bank. So it is a rare kind of scenario that has happened, and that this is the reason that we are covering this particular topic. Now, first of all, this approval has got the EU Small Finance Bank has got this approval under the Universal Banking License that allows a bank to offer both commercial as well as investment banking under the one entity. But before, so if you want to understand this particular statement more elaborately, we should be going further with our discussion. So first, we will be knowing that what is a small finance bank, then we will be saying that what is universal bank and what is the difference. So after the discussion of these two topics, you will be having a clear cut idea that what is the difference between a small finance bank and a universal bank. And then we will see that what is the eligibility criteria for a small finance bank to transit from a finance bank, small finance bank, to a universal bank. Okay, so this is what we are going to do in our today's discussion, and it is going to help you immensely, because if you see, on aggregate level, I have added everything whatever is required from a perspective of small finance bank and universal banking. I have tried to incorporate all the important topic comprehensively. So now let's begin. So what is small finance bank? We saw that EU small finance bank got the approval. So what is small finance bank? So these banks have a specialized bank. These are the specialized banks licensed by the RBI only to provide financial services to low income group and underserved communities. This is the two fundamental reason behind the establishment of small finance bank. They want to cater the low income group as well as the underserved community. Then it focuses on microfinance. It means unsecured loans, giving unsecured loans worth of some amount, micro enterprises and basic banking needs. It got it gets scheduled bank status under section 42 of RBI Act 1934 after meeting operational suitability. It means when it gets the license to function as a small finance bank, and when it's been a while that they function, and when they have suitable operations in the previous financial years, then they got the status of scheduled bank from the RBI under the section 42 of RBI Act 1934. It means initially when they get approval from RBI, they are not a scheduled bank. Once they operationalize, once they function for a while, and then seeing the suitability of their operations, RBI decide that whether they want to give it a scheduled bank status or not. The first and foremost thing is that it tried to cater the low income group and underserved community. It mainly focuses on microfinance, micro enterprises and basic banking needs. ठीक है? And while going through this particular statement that it focuses on microfinance and micro enterprises, you can utilize this statement because I am having if I remember in the year 2022, when I was giving the mains examination of PFRDA, over there, the only essay topic. So in PFRDA, you only got one essay topic, okay, in the mains examination. So over there, the essay topic was there on microfinance. So, and what government has done to improve the microfinance sector in our country. So over there, you could have added this statement that government has already established small finance bank regime in India to specifically focus on microfinance sector. Okay? Because we have RRBs that is there for regional rural areas, rural and agricultural sector. So you can use that data in you can say NABARD such examination. Okay? And then we have the small finance bank that is there for microfinance. Then we have the payment bank with some other aim. So you can utilize this kind of data in your answer writing. Now coming back to our discussion. So whenever a new banking regime comes, okay, or whenever these kind of things happens, okay, there must be a committee who must have been recommended the establishment of these kind of banks or this kind of institution. So the Nachiket Moore committee recommended the establishment of small finance banks in India. Who recommended? The Nachiket Moore committee recommended the establishment of small finance bank. Now, in the previous years only, one question can directly be framed from this topic. In a previous year examination, there has been multiple instances when RBI has given 3 to 4 committees in the options, and in the questions they ask that which of the following committee is related to capital account conversation in our India, or small finance bank regime in our India, or payment banks regime in our India. So these kind of committee you should always be remembering whenever a committee recommended the establishment of any new regime in our country, it becomes important. Okay, now let's see the objective. What was the objective? To promote financial inclusion. So now once again a new keyword, financial inclusion. Earlier we saw the keyword of microfinance. So these kind of keywords, whenever these kind of keywords comes in any notes or any topic, you should note it down. Why you should note it down? Because it helps you. Just wait for a minute. You should note it down. Why you should note it down? Because it helps you, in your answer writing, in value addition in your answer writing. So now whatever will come in context of financial inclusion, you can add this data. Okay? So promote financial inclusion for segment excluded from traditional banking. It means the same thing, the low income group and underserved communities. Provide small loans, saving, insurance and other basic banking services. Eligibility: how a company can get themselves registered as a small finance bank. So resident individual professionals, obviously Indian citizens, with a 10-year of senior level banking or finance experience can get the approval to establish a small finance bank. Now, private sector companies, societies, resident owned, obviously, their owner should be an Indian, with the successful track record of 5+ year can also get the license to run a small finance bank. Now, existing NBFCs, microfinance institutions, and local area banks, resident controlled, with the successful track record of 5+ year, can also convert into a small finance bank. So these are the different eligibility criteria. How a resident, a individual person can incorporate a small finance bank. How a private sector company or society can incorporate a small finance bank, or how as existing NBFC or microfinance institution or local area bank can transit their organization to a small finance bank. But what are the key norms? Okay, because if you see, now there are multiple kind of banks. Okay, we have the commercial banks, we have the cooperative banks. So the capital adequacy is something that is extremely important, or various rules and regulation or prudential framework or prudential regulations are something that is extremely important for any kind of banking entity. Now it can be a commercial bank or scheduled, non-scheduled, cooperative bank, or small finance bank or payment bank. So these are the few key norms that is extremely important from a point of view of small finance bank. First of all, the capital to risk weighted asset ratio. Okay, CRAR, the minimum 15%. What is CRAR? So CRAR is nothing, it's just the amount of capital a bank should be having in a form of tier 1 or tier 2 capital, or you can say more liquid kind of capital to absorb any kind of financial crisis or impact if it comes in future. Okay, so nothing, it's just a availability of enough capital with them to absorb any kind of financial crisis or any kind of liquidity crunch that may occur in future. So the minimum CRAR is 15% for small finance bank. As we saw in the objectives only, that they got formed just because of two major objectives. It means to provide a financial inclusion to low income group and underserved communities, and to provide other basic banking services. So, for these two purposes, there should be a criteria that must ensure that at least some amount of their activities needs to cater these kind of low income groups and underserved countries communities, sorry, underserved communities. So because of this we have this criteria, because of this requirement we have this key norms, that is their branches, at least 25% branches of these small finance banks should be in unbanked rural areas. Now, the priority sector lending should be 75% of adjusted net bank credit to public sector areas. Now, what does that mean? Priority sector lending is nothing. Now, there are some sectors that has got prioritized by the central government, that these are the areas, these are the different sectors that needs to have an enhanced flow of credit, or they are the priority whenever giving credit. These sectors should have some kind of priority. So we have as of now 7 priority sector areas we have, okay, including the agriculture, then we have the health and education, okay, then we have the MSMEs and all these kind of things, renewable sector and others. So we have 7 priority sectors as of now. So whatever the bank credit or the loans, in layman language I would say, whatever the loan on bank credit these organizations, the small finance bank should be providing, at least 75% of those total credit or those total loans should go towards priority sectors. Why so? Because the major reason behind their establishment is to cater low income group as well as the underserved communities. So this was the basic reason behind the establishment of this organization. So this is the reason that 75% of their total bank credit should go towards priority sectors. Then branch requirement, we saw that at least 25% of their all branches should get opened in a unbanked rural areas. Now capital, what is the capital that they must be having before commencing their operation as a small finance bank? So the minimum paid up voting equity capital is 200 crores. Okay, you should be having 200 crore with you if you want to get yourself registered as a small finance bank. Regulation. So it got governed by the Companies Act 2013, Banking Regulation Act 1949, RBI Act, and RBI directives. Okay. So this was it for small finance bank, and it is more than enough for you. Whatever you want to know about a small finance bank, comprehensively, it is more than enough. Okay. Now moving ahead, we have the what is universal bank. We saw that what is small finance bank. Now what is a universal bank? Because we are discussing that AU Small Finance Bank has got the approval of RBI to transit from a small finance bank to a universal bank. Then you must be knowing that what is a universal bank. So universal bank is a financial system where a single bank provide a wide spectrum of services. Over here we saw that this banks provides what they provide: the microfinance, micro enterprises, needs of micro enterprises, and basic banking needs. But universal banks provide a wide spectrum of services. Okay. They do traditional commercial banking, depositing, lending, mortgaging, etc., along with investment banking, insurance, wealth management, advisory services, etc. It means it provides all kind of financial services to the society, and that's why they called universal bank. It means their functions are universal in nature. They are not limited toward a specific sector or towards a specific criteria. Now customers get all in one financial solution under one institution. Okay. Now what are the features? So diverse services starting from accepting demand deposit to providing loans, credit cards, mutual funds, etc. One stop convenience. Obviously you will be getting all the financial services under one roof. Then it will provide you a one stop solution for every financial need of any financial services. Risk diversification. So it engages in multiple sectors to balance market risk. Because if you see in small finance banks, what it is, they are they are specifically there to cater the microfinance sector. Now in microfinance sector, if you see, the collateral availability of collateral is less, or you can say there is no collateral that is there in the microfinance sector. So microfinance sector or micro enterprises, so they are, these areas are have more risk appetite, and in those areas small finance banks are working. But universal banks have a wide spectrum of services. They can do all kind of banking services or investment services or insurance or wealth management. So they have a better ability of sectors to manage their risk appetite. Okay. Economics of sale. So shared infrastructure, tech platform, staff improve efficiency. They have a great scale economically to improve. Financial inclusion. They extend services to wide customer base, and that's why including the underserved group, and that's why they also provide the financial inclusion services. Now, how establishment can get a license from RBI to act as a universal bank. So recommendation: RBI and its universal banking in India. Recommendation concept suggested by the RH Khan committee. So universal bank, the whatever we'll see that what is the licensing policy in RBI for any organization to act as universal bank. So whenever these kind of things came in picture, you should relate it with the RH Khan committee. Okay. Now licensing. So RBI grants license after evaluating financial strength, governance, and inclusion strategy. RBI has introduced on tap policy 2016. It means whosoever eligible private sector entities can apply for universal banking license at any point of time. It means any private sector entity who thoughts that they have appropriate, they have everything to get the licensing, to get the license of universal bank, can reach to RBI. They have a on tap policy. Okay, they can provide all the required information to RBI, and then they can get in uh, the in principle approval from RBI to act as a universal bank. Okay. Now this recommendation came from the RH Khan committee. You should remember it. Now we saw that what is the difference between small finance bank and a universal bank. And it's been the last, it was 2014, so it's been a decade that any small finance bank has transited into a universal bank. And in last, now it's been a decade, So now, as AU Small Finance Bank has got the approval of RBI, so it is a big thing. So let's see that what is the eligibility criteria via which a small finance bank can transit from a small finance bank to a universal bank. So first of all, it should get a scheduled status. It should be having a scheduled status. And what we saw in a small finance bank, that when they got established initially, they don't have the scheduled commercial bank status. They get it after, once they start their operations, and when RBI watches their operational suitability for some period of time, then RBI can grant them their scheduled status under the section 42 of RBI Act. This is what we saw. So, but over here, if they want to, now they have got the scheduled status from RBI. Now they want to transit from a small finance bank to a universal bank. So the first and the foremost thing is, they should have at least, it should be at least 5 years since they have got the scheduled bank status from RBI. First thing. Then stock listing. Their shares, the shares of these small finance bank, must be listed on a recognized stock exchange. Okay. Net worth should be at least 100 crores. Okay? Sorry, 1000 crores. My mistake. Net worth should be 1000 crores. Financial health, so they should be profitable in their operations in the last 2 financial years. Their gross non-performing asset should be less than or equal to 3%, and net non-performing asset should be less than or equal to 1% in the last 2 financial years. Now, what is the difference between gross NPA and net NPA? So, the difference is nothing. It just all those assets that becomes non performing, or all those assets in which the principal or the, you can say, interest, the bank is not receiving any kind of principal or interest or any installment from the borrower in last 90 days, in the last 90 days. Okay, then it becomes a non performing asset. First of all, now gross non performing asset means all sum of summation of all non performing or the defaulted assets of a banking entity, we call it gross non performing asset. So obviously, when there is a chances of defaults from the borrowers, RBI says that all financial entities should be keeping a specific amount of capital with them to compensate this kind of losses. Okay, so for that purpose, RBI has told the small finance bank to keep, not only the small finance bank, to all financial regulated entities, to keep a amount of capital with them in a buffer. We call it provisioning. Provisioning means creating creating a provision to compensate or to absorb any kind of losses. Okay, so same goes for NPA. So RBI has this apprehension that there is a possibility of defaults. Okay, so they said to their all regulated entities that they should be having a provision to absorb the defaults of loan or the creation of non-performing asset. So for that purpose, they have the provisions. So whenever we deduct the provision with the gross non-performing asset, it means if you are having a 100 crore worth of non-performing asset and you already have a provision of 90 crores, it means you have kept 90 crores separately just to absorb this shock of defaults. Then whatever the amount will come, that is a 10 cr, will become your net non-performing asset. So this is the gross non-performing asset. And when we deduct the provisions that we have kept to deal with the non-performing assets, and when we deduct this thing, we come across a data that we call it the net non-performing asset. So the gross non-performing asset should be less than 3%, and the net performing asset should less than be or equal to 1% in the last 2 financial year, and they should be profitable in their businesses in the last 2 financial year. Now, promoter norms. So no new promoters or changes in existing promoters during transition. It means promoters are, you can say, are the founders who establishes the organization. Okay, so while transiting from a small finance bank to a universal bank, there should be no changes in the promoters preferences. Banks with a diversified loan portfolio get the priority. So these are the basic fundamentals, these are the eligibility criteria. If fulfilled by any small finance bank, they have an opportunity to transit from a small finance bank to a universal bank after they got the approval of Reserve Bank of India. And why it is so important, as we discussed, in the starting of this session, that RBI has already framed question in the last year, because last year it was the 10-year completion of 10 years since the you can say the since the emergence of the establishment of small finance bank. So last decade, so it was a 10-year completion in the year 2024. So they framed the question. Now this year as well, it is extremely you can say the it is quite possible that RBI will frame question from this topic. Why so? Because it's been a 10 to 11 years that no small finance bank had got themselves transited to a universal bank. So in the last decade, you can say after 10 to 11 year, AU Small Finance has become a first bank to transit from a small finance bank to a universal bank. The last approval was there in the year 2014. So you need to remember this as well. That last approval was there in the year 2014 when the Bandhan Bank and IDFC Bank got the approval. And you must be hearing about this bank, that is IDFC First Bank. So this bank came in existence. So last approval was in the 2014. And since then, this is a second approval. Okay? So this is it for today's live session, and you can download this content for free just by visiting our platform, our application, that you can download it from the Google Play Store. Okay, so you can get this data, you can get this document for free just downloading our apps, and you can visit our app, and from there you can get this PPT and this data for free of cost. And even if you have any kind of doubts in regards to any paid content that we provide, you can you can note down this number that is visible on your screen. You can take a screenshot, and you can contact on this number, and whatever kind of queries you will be having, it will get catered by our team. Okay, so thank you so much for joining today's live session. And if you want to get more of such kind of sessions, so do subscribe to our channel and turn on the notification bell so that you can get a notification whenever we go live. But the timing is going to be this only: every day at 12 p.m. we will be coming up with a live session for you people with such exciting components and such exciting topics. So till then, have a great day ahead. Bye.